It shouldn't come as a surprise that most investors give up at the worst possible times. The last time we saw the most extreme fear was at the July low, and promptly after that, we had a reversal and the price of Bitcoin rose 30% in a matter of 24 days. Just yesterday, 1st of August, we saw a very similar signal occur, also closing above 50% this time, so some good signs are flowing into the market. However, this doesn't guarantee that it is going to be an easy ride to a new all-time high, and many don't even believe we're going to get to a new all-time high on the price of Bitcoin. In today's video, I'm going to cover a ton of data going through the real estate data, the stock market data, Bitcoin, ETH, and Solana price analysis as we cover our monthly August forecast. Make sure you stick around. It's your home of macro cycle analysis with me, Jason Pizzino. A little worse for wear today, but we'll get over that. Like, subscribe to the channel as we recap these every single month. This is your monthly forecast. Heaps to get through. This is the agenda. Let's go. We got the real estate data, and then we'll look at the summertime lull that we see on the stock markets. And basically what I think, or at least in my own opinion, I'm looking forward to within August and Q3 of 2024. And then of course, let's look forward into wherever this peak comes in. So just very quickly on the first one here, real estate cycle, winner's curse phase. Cycle is still up. This is the macro cycle. If this thing is down, don't expect Bitcoin and cryptos to be doing very well at all. This is what the entire economy is based on, at least from my experience, and I hope you find some value from it too. Winner's curse phase, couple more years to go here. Real estate prices are continuing up. A little data here for the Aussies. We had some more data in for July, now that August is upon us. Brisbane, Adelaide, Perth, pumping. Absolutely red hot. Total returns for the year, 16, 15, 24. Sydney also doing well. And the laggard markets here are, of course, Melbourne and the three smallest markets here. So it's really important to know your areas, especially when it comes to the US, as it's such a big place. Now, this real estate and economic cycle, the 18.6-year cycle, is based off of 200 years of data in the United States of America. A lot of questions come up about that, but this goes back over 200 years of data. And again, it's playing out to a T. Prices are up. We've looked at the Case-Shiller home price index on the stock markets, and that is also at new all-time high prices, pushing to new fresh prices for the month of May. So when we look at the data, the trends are up, cycle is up, more money will eventually pour in, but in the short term, it doesn't always feel that way. And we've got a little bit of economic data or economic announcements to go through. So I've given you the info on Australia closing out July. Don't worry about these other three. Yeah, you might live there, but it doesn't matter because of the amount of people that actually live there. Canberra, Hobart, Darwin, barely making 700,000. And you can see for Adelaide, Perth, and Brisbane, about 5.5 million. So you can really see that the numbers make more sense when you're looking at larger populations, which is why the cycle is based on the US. Biggest population, biggest economy for that size of population, the biggest economy in the world where the most amount of money is. All right. So let's have a look at this summertime lull as we head into the next number here, our next piece on the agenda, July, summertime lull leading into August, of course, which is still summertime. This one here through July, August typically aren't the strongest months on the stock markets. It doesn't mean that the market has to collapse at that point. I think it's just known that the summertime is a little bit lackluster when you compare it to the other months of the year. And as we get into October and November, that's when things can start to warm up, get a little hotter. And as you get into towards the end of November into December, here comes that Christmas rally that many people hope for every single year. But nonetheless, just looking at the data here, going back 1978, July, August, not the greatest months. And that, of course, is showing up on the charts as well. Economic data for the US, we obviously had the interest rate announcement. Interest rates remained on pause yet again, but this time we've got the S&P 500 starting to show some signs of weakness here. And I think the market is really hoping for an interest rate cut. Now, I've been very vocal about the interest rates remaining on pause throughout 2024. When I mentioned this back in January, remember, that's 7 months ago when the majority of people were saying otherwise. Eventually, they could have a cut. And maybe what's going on is that you're starting to see the market roll over in anticipation of a cut, which might mark some sort of bottom coming up in the market. We'll have to wait and see. Remember, lows are formed on bad news, and that's whatever the market anticipates or believes to be bad news, especially as we're in a macro bull market. So I've gone over that with the winner's curse phase. Prices are still up. Markets are still up. Before we move on to number 4 with the global indexes, because of course you want to see the rest of the world trailing along behind the US, the NASDAQ streak has ended. So looking at the monthly chart here, July was a red month, down 2%, but there was a long streak of 15 years going back to 2007 where July was negative 0.5, and that's ended now. So 15 years of Julys, damn, I'm going to get that out, have ended. Red July here. So what happens for August is the next question. All right, that brings on more on the indices. So let's have a look at S&P, NASDAQ, and then get to a quick look at the UK and Australia. So the S&P 500 here, pretty significant trend to the upside. I'm on the monthly chart. The months here, green, 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 one red, green, green, green. It's currently into a red, only a couple of days now into August. The data suggests that August isn't the greatest time as we've looked at for the summertime lull. And in terms of the price action, top to bottom in the monthly swing, key price levels for support during any sort of correction, 5,300 points. And then we can move back to a more macro look here, 4,900 points. Both of these figures are still above the old all-time high and would still be roughly above the previous swing low. So there's still a lot of room for the market to move. It could move down to those levels there, single digits, 9%, and would still be in a healthy corrective phase for the S&P 500, which would then set it up for the next leg to the upside. So what actually happens in August? Obviously, that's anyone's guess. The probabilities to me suggest that we'll remain underneath the old all-time high and potentially form a trading range over the coming months as we lead into the election. I think that is going to be similar now for the NASDAQ. And what I'm looking for are the price ranges. So the top is in here, call it 21,000 points for the NASDAQ. And you've got a swing bottom and a 50% level, 17,500, and that swing low is at 17,100. So anything between sort of 21,000, 17,000, probably not a bad place for the market to consolidate before the next move to the upside. Now we're 1 month into quarter 3, obviously 2 months to go. Just looking at the action itself, so the greens and the reds, plenty of greens to the upside. Typically, you don't see more than one red. Sure, we had the bear market of 2022, you had 3 red quarters in a row, then it turned around, green, 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 red, green, 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 possibly some sort of red or very small gain. But remember, there's 2 months to go. This thing could still drop. I've given you price targets or price ranges to the downside. And then by the end of the period, there's still 2 months, it could run back up and give you some sort of small red month like it has done in the past. 2015, that was basically negative 0.1. And then you had 2018, that was negative 1.1%. And then your biggest months, biggest quarters were obviously, that's COVID. Then you had a little one here in 2015, 2018, and then of course 2022. Looking at the runs themselves, they're starting to increase. So this also plays hand in hand with the winner's curse phase. You can see the ascension of the market, the price ranges, pretty significant on the grind up. This is the mid-cycle. Then the prices have started to go even faster to the upside. I'm using this one here I just want to keep track of that along the journey of this second half of the real estate cycle into the peak. But nonetheless, if this is to grind around, that will give us a bit more time here before that next angle starts to take shape into the final peak. And so almost every single time you see something very, very similar, some pretty significant moves, and then it gets faster and faster into a peak before it all comes crashing down. Just a quick look here on the S&P 500 for major crashes. I don't think anything's coming in 2024. It doesn't seem likely in 2025. And we have to look out past that price point. And I bring that up now so that if there are any fears of major crashes in the coming years, just know that the last 100 years of data have shown only 8 times, the white arrows here, where the S&P 500 has corrected 30% or more. 8 times in the last 100 years. So roughly every 12 years, you'd see a correction of 30%. I bring that up because it's almost daily, weekly, month, whatever it is, right? There's always some idiot calling for a 50% correction or an 80% correction, something to take out the old COVID low. It's almost impossible for that to happen now. Looking at that correction, that's 60% from the current price. Personally, I don't think the markets are ready to roll over yet. It's still a bull market. But if this happened to be the top and everyone was wrong, a 60% correction has happened a couple of times. This was one of the closest ones in 2007 to 2009. And that would only just level off with the COVID low for the S&P 500. If the markets are to go higher and break out of this logarithmic trading range to the upside, 8 times out of 100 years, you've got something between 30 and 59%. So let's just look at it to the upside going into 2026, sometime late 2026, 2027. Look to the downside here at 35%, which is what the COVID drop was. That takes you down to 4,600 points, basically just back to the peak of 2022. Take it down 50%. It barely gets close to 3,500 points, which was the low of 2022. And I'm just calling a number here up at 7,000 points. You know, it could go higher. Maybe it doesn't reach that high. And then let's take it out to 55 to 60%. That would only take you back to 2,800 points, which is pretty unlikely, but it's still nowhere near the low of the COVID low. So that's a bit of a forecast here for the next several years. It doesn't seem likely, just based on the last 100 years of S&P data history, that it would take out the COVID low. So it can project things from that point. The only time it did do that was obviously the Great Depression, 1929 to 1932. It was an 86% correction, but the market was very different then. The Fed wasn't printing money and putting it into the market. Since that point, after the Second World War, you've seen basically the max of around 50 to 55% corrections along the way. And if you add in these 3 red ones here, those ones there were around 27, 28, 29% corrections. Every so often, I love to throw in some data to basically squash all of the doomsday porn out there that hopes for these significant corrections. It's just so extremely unlikely that it's going to happen. It doesn't seem right to basically bet the farm on a severe correction that is unlikely to happen. So we're here for August and quarter 3. Let's continue on. Quick look at Australia here on the monthly chart. Basically, it's been grinding up and finally broken into fresh all-time highs after retesting the old tops. You know the old saying, previous resistance can become support and vice versa. Now we're finding ourselves into new fresh highs. So we're starting to see the rest of the world catch up to the US, break into new highs. Obviously, Australia, 13th largest economy in the world, something thereabouts. UK, top 5. It again has done the same thing. There's the old all-time high, broke out, retest, and now it's trading at pretty significant prices here. It's done the same thing, continued to grind for years upon years after the early 2000s double top and then the grind after the GFC. Broke out, retest, and then continued higher. Over the course of history, many stock markets have this sort of upwards bias. And for some reason or another, it's TA, if you get it right, they come back to this baseline almost every single time throughout history. So let's see how far up this market gets and whether we can look towards the end of the 2020s and see whether it does correct back to this particular line. So we're halfway through the agenda. We've covered off the stock market and economic announcements. Now let's get into Bitcoin market sentiment, the trends. Let's look at July and August and then finish it off with the last 2 points here. So short term, last 24 hours, nice significant corrections on the market, some good liquidations here. Basically flushing out a lot of the leverage. That's what we want to see in the markets overall to basically reset the sentiment, right? Lots of longs got liquidated. Our third highest day of longs liquidated since the low, and the low was that 5th of July that I showed you on the in the intro. So that's a good sign there. Also with the Google Trends, it's creeping, continues to creep higher from mid-June. So the interest for Bitcoin worldwide, last 12 months, 35, 36, 40, and then creeping up to 43 and 44. So good signs there that we're at least seeing some of the interest come back, even if there isn't as much trading volume going on. And so I do like to see the longs and the shorts get liquidated. Basically, the leverage continue to get flushed out until one side is particularly heavy, and that's typically when we start to see some significant moves, right? If you've got a lot of people looking to short the market, typically the opposite will happen, and they get squeezed out and they have to buy back into their positions to close out their wrong orders, and that starts to push the price high, which is called a short squeeze. Exactly the same thing can happen in reverse. A lot of longs are hoping for higher prices. They basically get squeezed out, and you get a short squeeze, and the market tumbles from that point. So that's what I was looking at with the longs. Market sentiment seems to be climbing. We take a look at the 5 years here for the price, or for the name of Bitcoin in the search terms. I'm struggling here. I'm getting through it, but we need to cover off the monthly analysis. So 5 years here, June was the low point, and we started to have a nice little climb higher. I suspect it's going to range trade now for the next couple of months, and I've got some time frames for you coming up with the Bitcoin analysis, so hang in there. The market sentiment now, fear and greed index at 57, jumped back to green after yesterday hitting neutral. Longer term for August, this is a great sign, at least in my opinion, my analysis, because we've had the flush out through July, bounce back, and then now again, a nice fresh reset to neutral. I wouldn't mind seeing it sort of creep into the 40s, but I can't force that, of course. Anything between that sort of 30s to 50s where we currently sit, I think that's a good area for this market now that we've seen a fear grab to reset so the prices can start to run a little higher. That leads us to the psychology of a market cycle, so our Wall Street cheat sheet. I brought this to you a long time ago. This one's 12 months, and then I also did it at the bottom of the cycle, Bitcoin going all the way back into 2022. Remember what people were talking about then. If you've stuck around that long, they were looking at this as further downside and kept showing up this chart and saying, this is where we are. We've got all of this to go. But many of our signals were saying otherwise. We were looking at the bottom around here for BTC. We thought that was around there and that we're about to climb higher. Right now, I think we are still in this hope, disbelief, sort of bouncing between them, because a lot of the responses I've seen meet this sort of rationale, right? Disbelief, this rally will fail like others. And I'm still seeing quite a few comments, people saying it's over, it's all going to collapse from this point. It can happen. I haven't seen the other signs to say that it's time for that to happen yet. I just think it's someone, people writing comments and they don't really have anything else to back it up apart from a thought and a comment. My analysis, everything that I'm showing you here, leads me to believe we're somewhere in this stage for Bitcoin and cryptocurrencies. For the stock markets, they're still on this journey as well. They've got longer to go into this belief, thrill, and euphoria too. Bitcoin's forward returns table. This is exclusive to TIA Indicator Suite. We're getting close to releasing this. Hang in there. I'll let you know on the email list. So make sure you are subscribed. Link down here. That's the free crypto and economic report. We'll let you know when this is out. What happens in July? Does it happen in August as well? Previous year, you had green, then red. But as you start to note, what happened in July often, not always, but often happens in August. Green and green, green and green, red and red, green, red. So another difference there. Green, green, red, red. Another difference in 2015. Red, red, green, 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 red, red. And then 2010 was different. Now, if we take out the bearish years, so basically 2014, 2018, 2022, it starts to stack the odds a little more in the favor of what happened in July might happen in August as well. July was green. Maybe we also get a green month in August, but a green month doesn't mean a new all-time high. It just means that it'll close higher than it opens. So if we count these up, you've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That August copied what July did, and 2 times that it did the opposite. So in terms of the probabilities, let's go with August will potentially be green. I'm not expecting to be a huge green month, but it could potentially be a good green month here. The July-September quarter, our third quarter for BTC, a lot of reds there. Looking at the final results, it's it is the worst quarter for Bitcoin as well. So August could still be green. Maybe September ends up red, and that obviously causes another red quarter. But we're seeing 2 red quarters in a row, 2 greens, 1 red, 2 greens, 3 reds, and that's the only other time we've saw 3 red quarters in a row. Otherwise, it's got a pretty good chance of the quarter ending green, which leads us into the end of September, so 2 months from now. So just trying to forward plan here in terms of what should we do, because this is all leading to some sort of action, right? I like to do the analysis, share it with you. You take what you want, do your own research, and then you need an action plan. You just can't listen to videos non-stop on YouTube, otherwise you get nothing done. So it's all leading to some sort of action plan. So here we are. It's looking like this could be one of those times that is a good accumulation time for stronger projects. Obviously, Bitcoin is one of those that I choose. You do you, right? So let's move on now to the timeframes here for Bitcoin and how long these moves last. And probably got something in the title like every time we see this historical TIA indicator, because I don't know anyone else using Gann analysis in the markets, you get a very significant move. And it might be a significant move in price. Typically, it's a significant move in price, which should be the main thing we worry about because that's how you make money. Otherwise, it's a significant move in market sentiment. And one of those times here was March 2023. So we had a 8-month accumulation and then a breakout to the upside. So although the price range may not be that significant, speaking about Bitcoin and crypto gains, it's only 58% from low to high. The sentiment shift in that month was very, very substantial. It broke out of the accumulation range and never closed back in that accumulation range. So it was an extremely pivotal point in the market for this breakout. Let's have a look back at all of the historic points here. And I'll take off the swing so we can see these accumulation zones. Going back to the 2011 to 2013 cycle, 5 months, consolidation, extreme breakout move. The price did not go back into that prior accumulation. Breaks out, another 4 months, and then another breakout. So there's still significant corrections within the accumulations and reaccumulations. And one of the most important things to note is that an extreme move happens every single time. Most often, you won't see the price go back into that trading zone. So you can start to see what we're building towards here. 4 months breakout, right? Huge, huge move. Doesn't look like it on the chart, but take my word for it. Double digits up to triple digits. So $9, $10 up to $300. Had it again. 1, 2, 3, 4, 5 months. Pretty significant correction in there. Breakout to the peak, going from 100 and 200 bucks all the way up to $1,200. All right, moving on to the next cycle. Something that probably represents somewhere that we're in within this cycle. So a similar sort of pattern. Yes, it didn't break out of the all-time high this early, but just looking at the patterns in terms of the accumulations here. 5 months, then a breakout, didn't go back or didn't close back into that zone, did touch it and then quickly bounced out. Another 5 months, and then a break to the upside. Note, I've just written here 2 months. That's basically the time frame for that correction before the price turned around. But if you're living through that, I suspect it would have felt similar to what we're living through now, because the time has been about 5 months, yet the price has gone basically nowhere, and people get extremely fearful and excited and fearful again. And when you look back, basically the price has done absolutely nothing. But the emotions would probably still be quite high for the people living through that, going from 800 bucks down to $400 or $500 because the corrections are substantial. So huge accumulation, breakout, long time there. You got to wait 5 months. Most people cannot stomach that. They can't wait that long. Another 5 months, breakout. We've covered that. Let's move on. We've got a few more of them here. 1, 2, 3, 4 months and the breakout. Huge, huge move. Yes, it corrected from there. This one is my own analysis to try and read the conditions at that time. Obviously, we had COVID. big move to the downside. That basically wiped out almost all of the sellers. Anyone that had absolute weak hands, that month was a godsend for the strong believers, because you barely saw any sort of correction after that point. So I've had to sort of juggle this and look at it like, well, if you've got rid of all of the sellers, any sort of slow grind to the upside, I'm considering still an accumulation zone, because you basically washed out all the sellers. You still don't have that huge strong move for a major bull market yet, so you just don't have enough supply in there to push the price down any further. Therefore, you're just getting these smaller ranges to the upside. Very, very bullish signs. But again, 1, 2, 3, 4, 5, and then the breakout. So 5 months there. Accumulation 1, so basically the bottom of the cycle, 1, 2, 3, 4, 5, 6, 7, 8, and then the breakout. And one of the most recent ones that we saw, everyone got very bearish in September at that exact low. A few words were thrown around on X with the mega bears, the ones I'm talking about, that were shorting the market all the way up to $74,000, thinking that was the collapse time, to the exact day in September that called the low, and then the market took off without them. That was 6 months. Now, we're at 1, 2, 3, 4 into our 5th month. 1, 2, 3, 4. Yep, into our 5th month now. So you tell me whether you think this is going to repeat or not. You got 5 months, 8 months, 6 months, 5 months, 5 months, 5 months, 4 months, 5 months. We're into our 5th month. Could another extreme move happen later this month, potentially September, like we saw last year? We had the turnaround. The extreme move didn't happen in September. It happened the month after, in October. So maybe we go on that sort of move. Then we've got some fractals to have a look at with Ethereum, and I've also got Solana, so I better get a move on here. But I'm quite excited again for this particular move. I did say that we would have invalidation. So while I'm on Bitcoin, let's just take a look at the invalidation. So a major one here, we're looking at macro cycles, we're looking at longer term timeframes. So a major invalidation, one would be a breakdown of the 50% level, 44,600. The second is the low in January. I'm not going to spend a ton of time on this. I'll do it in future videos because this one's a little too longer already. 38,500. So anything under that zone, that would be a major invalidation. Game over. Come back. Everything is over. We'll focus on that if it ever happens, right? But for now, it seems like the same sort of pattern is happening time and time again. Left, right, translated cycle. This was at the peak in March. A lot of people were calling for a left translated cycle. I couldn't see it happening based on all of our other theories that I guess are almost exclusive to us here. Obviously, you've got Phil and Akil at Property Share Market Economics. But for us in Bitcoin and cryptos, there was no one looking at the real estate and economic cycle and the bull markets in the stock market, which had us believe that this was very unlikely to be a left translated cycle. We had the same sort of thing happen in 2019 when the market ran up and everyone thought, well, this could end early. It was such a big move. It's gonna be over. And of course, that was completely wrong. I think that's what's happened this time. It doesn't seem like a big call now because everyone's sort of gotten used to the fact that the market's grinding above $60,000. But if you remember back 5 months ago into March, that of course was a very different story. From this point, quarterly chart, longer term timeframes, the cycles have shown you've got a couple of red quarters per cycle, or a few, and then boom time. A few red quarters, boom time. A couple of red quarters, boom time. We've got our couple of red quarters now. Maybe one more. We've seen it in the past. And this one also had 3 red quarters, but they were spaced out. Maybe similar to the cycle, the cycle that we're in now. And then boom time. And I think that'll still lead us into the right translated cycle. We have to look at Q1 in 2025. Why? Well, Ethereum gives us some clues to that. Invalidation, quick look at that. Low to high. 25K, very important. Sorry, 2,500, very important level. And then a breakdown of 2,000, another important level, as that was the accumulation zone. With that out of the way, they're the invalidation points. Let's have a look at these timeframes and fractals to the upside. So we got our 5-month move, 6 months before. Take these things off the chart so we can see what's going on. Here are a few of the fractals that I've taken from this move in 2020 and 2021. starting from about October. Let's break down two of the fractals. Here is the first one going into that first peak, starting from this little bar in October. So I'm just going to use this and start it from October. So yeah, it could take a couple more months. Obviously, Bitcoin could run first, then ETH and the altcoins could follow. Should it start in October like it did last year? Well, that would take us out to May of 2025. If it started in September, take it a month back, around April. So I'm still interested in Q1 of 2025. I'm not saying it's the top. I don't know why there's still comments about people saying you said the top's in Q1. No, I'm taking a look at that and I want to see how the market responds at that time, because I think that's going to be an important time frame for all of the markets. So that's Q1 2025. Now I've got the full fractal here from that October date to the peak in November. Let's start it again in October. There it is there, October. That'll take us out to November of 2025. So basically Q4 of 2025. If it happened in September, so say it was next month, and we just had another month of grinding around here, that could take us out into October. So again, still Q4 of 2025. Pretty interesting stuff, I think, coming forward into this final leg of the market. We've seen the accumulation, the reaccumulation, the next reaccumulation. If this is to play out, do not take this into account. Obviously, I don't think ETH is going to be at $40,000. Forget the price. This is just for the time frames on the right-hand side of the chart. First point I'm looking at, Q1 might be an interesting stage for any sort of profit taking, and then Q4. The final one I want to look at is Solana here, SOL. This has been doing pretty good things and is in a stronger position than Ethereum is at the moment. Still above the 50% level. We're on the quarterly chart, and then I'll break it down to the monthly. All of the two closes here have been above the 50% level. So pretty decent. 3 greens and a red. You also had a green at the bottom, small red, and not enough data here to show what happened in the previous cycle, but there was also one red quarter, couple of greens, boom time happened after that. So if we look at the monthly for Solana, again, very, very strong showing here. Only one of the months closed under the 50%, and then they're all above it. So in validation, let's take the 50% to the top, and the first sign roughly around 109, and then these lows that happened in January at about $79. So two of those key levels to watch in case this is a lower swing top and it all breaks down. Major invalidation there under $80. Now we only spent a little bit of time on ETH and Solana because the video is quite long, so make sure you hit the like and subscribe button if you want to see these in the future in more detail, and let me know in the pinned comment down below if you want me to go into more detail with the major altcoins. Other than that, I'm quite excited for what the rest of Q3 has involved. It's probably potentially going to be a little bit more quiet, but as you can see, or at least what I can see, is that these accumulation zones are something to be glued to your screens with, or at least, at the very least, have alert levels set lower down in case the market starts to climb and starts to break out of key resistance points. The majority, I believe, as they have missed it every single time in the past, will miss it this time, and they will start to enter towards the peak like they did in March, like they did in 2021, like they did in 2017, and like some of them did in 2019. I think it's all going to repeat relatively the same. Call it a rhyme, and I'll finish my video there. Thanks again, guys. I'll see you at the next one, or in Discord with the TIA Premium members. Cheers.